Well, leading up to the most recent federal election, both sides of politics said that they would tweak the First Home Guarantee scheme, and this scheme is in place at the moment that allows first home buyers to effectively rock up with a 5% deposit, and then they won't have to pay lenders' mortgage insurance. The federal government effectively steps in and provides the security guarantee that lenders' mortgage insurance would provide. At the election, or pre-election, both sides said that they would increase the income threshold, so you could earn $1 million a year and still access this. They were also removing the caps on how many spots per year would be available. And also they've increased the purchase price limits around Australia. Now, if you're listening to this podcast when it drops on Tuesday, the 26th of August, 2025, we're recording it on Monday, the 25th. Yesterday and this morning, we woke up to the news that the government, the Albanese government, they had planned to roll this change out at the start of the new calendar year. However, it was announced that they're making it effective from October. So what we're going to do today, I am joined by Rach Kroon and John Pidgeon from the This Is Property podcast. We're going to discuss some details. We're going to do some case studies. We're going to talk about some other things about, well, what if I'm an investor? What does this do to the property market? What if I'm ready to buy my first home and I was on track to do it maybe in the new year? Should I do it sooner? Should I do it later? We're going to discuss all the things and we'll get into it. Right now, Rach and John, welcome back to the show on such short notice.
Thank you.
Thank you, Glenn. Pleasure.
And we'll get into it right now. You're listening to Money, 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 or as the regulars like to call us, M3. Everything discussed on the podcast is general advice only, which I'm licensed to give, and details can be found in the show notes. My name's Glen James, former financial advisor, now podcaster. I host this show and a show called Retire Right. I've also got a book called The Quick Start Guide to Investing, which you can check out wherever good books are sold, or there's a link in the show notes. Otherwise, thanks so much for listening today. Now on with the show. Okay, so potentially, Rach, you've got some case studies on the real-world implications for this, for first home buyers. Can we start maybe some opening comments from you, Rach?
Yeah, so this is some huge news that's come out this morning. I mean, my team are very excited and everybody's on the phones already. It's only 10 o'clock in the morning. And I think what it's going to do is allow a lot more people into the market sooner. So that moving from from January through to October is actually going to have a lot of people get in with a lot less deposit and save a lot of, lenders' mortgage insurance. Everybody is very excited in the market at the moment.
Yeah. John, any opening comments before we get to some examples?
Yeah, Christmas has come early for a few people, hasn't it? So I think, the 5%, obviously, if we've got that waiting around, then we can use it in October for first home buyers. But I suppose investors' sentiment is, well, let's get in before January prior to today's news. So they'll be scrounging around trying to buy property ASAP before October now. So it's some interesting times ahead in particular markets, which will obviously flesh out.
Yeah, and I'll just start by reading a statement that Albo said. I got this from the AFR. He was obviously on some type of press conference. They say this will have a beneficial impact together. All the measures that were put forward, Albanese said. Housing Minister Claire O'Neil said the policy was expected to increase the price of housing by 0.5% over 6 years. We recognise that there's just not one thing that you can do. So here's one policy that will have an impact. Albanese told reporters in Canberra, arguing that the government has a suite of plans, including the Housing Australia Future Fund, the Shared Equity Scheme, and build-to-rent incentives for private rentals. Albanese said the deposit scheme will get more people into the market. You can't look at it in isolation. So my opening comment is maybe the 0.5% is a bit rich. It could be a little bit more than that, but I don't know. They're obviously looking at some type of modelling. Rach, do you want to maybe show us some real-world case studies of people and clients of Sphere Home Loans that your team are working with at the moment and how this really would impact them in a positive way?
Yeah, so I asked the team just to reach out and give me a couple of examples this morning of people that they're working with in the market and what difference it's going to make for them in real dollar terms. So just for example, if you were purchasing a property as a first home buyer in Queensland and you're buying for $750,000, your contribution today would be you would at that level you'd pay stamp duty, but you'd also pay lender's mortgage insurance. So you may need over $70,000 to actually get into the market. But once that first home buyer scheme comes in, you would only need about $43,000 because you're paying some stamp duty because there's still some stamp duty at $700 in Queensland, but you only need a 5% deposit. And you also would be saving about $20,000 in lender's mortgage insurance. And that's the big thing. The lender's mortgage insurance, as well as needing less money at the time you buy. I'm trying to give another example of one that I've just had come through, which was somebody buying in New South Wales, and it was at $1.5 million. So that's a really big purchase price. And over the last scheme, especially with their income and the price that they're paying, they would have no concessions and no help to get into the market. That's a pretty big purchase price. Currently, they would need over $200,000 to get in. But once this scheme comes in October, these same clients are going to save $50,000 in lender's mortgage insurance and actually need $70,000 less to get into the market. So at $1.5 million, they're going to need $145,000, which was going to be in January, but now that's moved forward until October.
And just to clarify, everyone, the income caps that are in the scheme at the moment, it's $120,000 for an individual or $200,000 for a couple, and there was maybe up to 20,000 spots per year. There were some other spots for some other carve-outs, but effectively there is no income cap now and unlimited spots.
So, and just another one, we had some clients that were actually going to move out of a city to be able to buy a home an hour out of the city. So they're planning on commuting. Their purchase price is $800,000 and they've got an income jointly of over $200,000. So they weren't qualifying under the scheme because of the income caps. So they would need at the moment over $80,000 to get into the market, and they'd be paying $25,000 in lender's mortgage insurance. From October, those same clients, so they've got an income of over $200,000 as a couple, they're buying for $800,000, they are only going to need $45,000 to get into the market, all up. That's a huge difference. And we've got hundreds of clients on the moment that were on savings plans getting ready for January, but this has just changed the goalpost for them. Some are going to try to get in earlier, but there'll be a lot of movement off the back of this.
And I think before we go on, because I'm just conscious that, we live in this world every day and we sometimes take it for granted that, everyone knows about this stuff, but maybe it's worth just pausing for 1 second and just reiterating. If someone ordinarily wanted to buy we'll just round numbers, $1 million house, right? To get lending on that, you would have to probably have at least a 10% deposit and pay a mortgage insurance policy to get the loan.
That's right. So that example that I just gave with the $800,000 purchase, the reason they would need now $80,000 to get in the market would be the fact that they need that 10% deposit or not. But even at that point, they'd be paying $25,000 in mortgage insurance. So the two things that they're saving are the lender's mortgage insurance, which might be 3 or 4% of your loan amount at 95%. But also they need $50,000 less to get in. So that's going to mean a timestamp that they can actually enter the market a lot earlier. And saving $45,000 is a whole lot easier than $80,000.
So the federal government is effectively becoming the security, because ordinarily you want a 20% deposit to get good rates and, a healthy loan to value ratio. So if it was $1 million property, $200,000, well, I don't have 200, I only got 100, we'll pay an insurance company to guarantee. So if you don't pay and the bank doesn't get their money back, that insurance company will pay the bank. But now effectively the government are putting in as security that 15%. So first home buyers can buy a house with a 5% deposit.
That is completely right. So people used to say you'd have to save a 20% deposit so you don't A, pay mortgage insurance, but B, have a higher rate, because banks charge you higher rates if you're borrowing 95%. So now you don't pay the mortgage insurance if you've got the 5% deposit using the guarantee, but you also get the rates if you had a 20% deposit. And that's a big thing. You're not paying high interest rates. You're paying the rates of somebody that had a 20% deposit.
And have you got one more example there, Rach?
There was one that just got sent to me of a client at the moment. So these are clients that are buying in Victoria.
Yeah.
And they're actually just getting their pre-approval at the moment. They're both on quite big incomes. So they're on a joint income of over 250,000. They're buying for 800,000. They were just organising their pre-approval with one of my team, and they were going to have $25,000 in mortgage insurance when they bought. So now they're going to wait until October, and they'll save themselves that $25,000 in lender's mortgage insurance by buying at that level. They'll still pay stamp duty in Victoria because of the threshold. So you've got to look at two things. You've got to look at both the price caps for the first home guarantee, which, just quickly, it's going up to $1.5 million for New South Wales. It's $950 for Vic. Queensland, it's going up to $1 million, and say Tas is $700,000. But the other thing that you still need to look at is the state-based incentive of stamp duty concession. So that is still in place. So the stamp duty concession in New South Wales is up to $800,000, but you pay a little bit less at $900, and then you start paying full freight at $1 million. But somebody in Victoria, the stamp duty concession is only $600,000. So, yeah.
So people can actually use the federal scheme and their state-based schemes.
So you can layer the national scheme of the 5% guarantee. You can layer that with your state-based stamp duty concession. You can also layer that again with the First Home Super Saver scheme if you've been saving in your super. And the other thing you can layer it with, if you're building or buying something new, is the First Homebuyer Grant, which is state-based.
Yeah.
So in Queensland at the moment, that's huge.
Yeah. So, there's legitimate cases. So what you're saying is if someone was about to buy right now, they had their ducks lined up, we're going to do this, we're going to buy and pay some lenders and mortgage insurance, get in the property, we didn't want to wait till January. The thing is okay, we'll definitely wait 2 months now because there's unlimited spots, we've got a big income. Why wouldn't you wait?
Well, I think that's still going to be up to the individual to think what will happen in the market in those 2 months, because I know that a lot of people were trying to get in before January. That will probably change until October now.
Now, Johnny boy,
yeah,
I think this is full disclosure, I own a property and I'm not a first home buyer, and I got the concessions and stamp duty waivers and all that stuff. But just from a 30,000 foot view of this, people with $300,000-$400,000 incomes are now going to be being able to use this scheme. It could seem like a slap in the face to someone on $90,000 a year. And, you zoom out and have a look, what could go wrong? More people in the market.
Yeah, well, if we step back a bit, we've really got 4 types of people waking up this morning. We've got the first home buyer that's excited by this news. We've got the owner-occupier that's already got property. We've got the tenant who's really at the bottom of all of this, and just how it all plays out as a tenant is can be quite scary. And then we've got the landlord/investor. So I think obviously the first home buyer is excited by this news, but the underlying message here is we still haven't got enough housing to serve the country. So when this sort of news comes through, and I don't want to play Daryl Downer on this, but I think the message is, well, the stats haven't changed. We haven't got enough housing. We've got massive demand. which has been fueled even more. It's been brought forward by 3 months, 4 months, and all it does lead to is price inflation. Now, probably Sydney is the only market around the country right now that's probably least affected by this, just because of the unaffordability of the market in Sydney as we speak.
Yeah, I do think this will encourage a lot of people living in Sydney, though, to maybe consider suburbs that they can buy and afford in outside of Sydney. So, they might be going to, say, Wollongong and buying for $1 million and actually being able to enter the property market.
Yeah, so that's the $1 million question, isn't it? No pun intended. Is are they going to uproot themselves and go away from family and friends down to a Wollongong or up to Newcastle or Central Coast to take advantage of this? And in a lot of cases, they might say, well, bugger it, I am moving because it's so lucrative for me. That LMI amounts that you were mentioning before, Rach, like that's extraordinary amounts of money to have to capitalise into a loan.
It is an extreme amount of money, but it's also the repayment. So the repayment that people are making are going to be substantially less because their interest rate is lower, because they're going in at an 80% risk to the bank rather than a 95%. Now, I guess I had some concerns about what was going to happen in January, thinking everybody's going to be there at the same day trying to get in. I also thought when the rates went down last week that this is actually going to give a lot of investors a chance to beat the first home buyers to the market and snap that up. And so I just feel like this change could be a really positive thing for first home buyers, because I think more people are going to be able to get in earlier and I guess beat those investors to the properties while they're still there.
Yeah, I mean, there was one of our BAs was saying this morning, like they were going to an open home where there was 40 people at the open home. 10 of them were buyers agents, and was just like crawling over each other just to try and get a bid in. Like that's it's pretty crazy times out there, and when stuff like this happens, I think people can get carried away and just go and take advantage of the scheme per se and just go and buy something. That's the concern for me, is like, well, okay, are we just going to go and buy an asset? Are we just going to go and buy in any region just to get in and take advantage of it, to say that, yeah, I've got my own home, I've got some security, or I've got some certainty, I've got my great Aussie dream. We only need 1 or 2 interest rate rises the other way for that to have impact, because remember that they're borrowing 95% of the purchase price. So that fact doesn't change.
Yeah, that's an interesting point there, Johnny. Like the fundamentals with buying a house, you need 2 things. You need security, or the deposit, which this problem solves, a big part of the problem. And parental guarantee might do the same, all that stuff. But the other side of the coin, you need to service the loan. And while the government is effectively guaranteeing 15%, you still are getting a loan for 95%, plus maybe some stamp costs in there.
Yeah, I just had a text come through from one of my team that I was reading saying that they've got a scenario where there are a couple that haven't owned a property in 10 years, but they were in the market before, and they are also going to qualify for this. So that first home buyer scheme is actually still eligible for people who haven't been in the market for over 10 years. So you might have had bought a house, 10 years ago and needed to sell it, and now you haven't been in the market since. You can still use that scheme, even though you may pay stamp duty.
Yeah. We're going to take a break. When we get back, I'm going to ask a scandalous question. We'll be back right after this.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at skye.com.au. That's skye.com.au, and they'll point you in the right direction.
Okay, what I want to know, and this is where, when I say, when you look at the details, awesome, this is going to help people that I know, it's going to help many listeners, but then the pragmatist comes out, the Glen James logical pragmatist, what could go wrong? Rach, could somebody, because I was literally talking to a friend on the weekend, she's about to buy her first home, and she's got a good amount of savings, call it 200 grand. And her problem is the servicing's getting her. So, she's found the property, all that stuff, she's going to put a 20% deposit in herself, yada, yada, yada. This scheme, could you cook the books and effectively just still get a 95 loan with the government incentive, take the risk and just get a little bit of higher interest rate and then just have your cash on an offset account? Like, do you have to put capital in if you've got it?
There's a rule that you can only leave a certain amount of money out. So using this guarantee, and you've really got to look. So strip my mic. You've got to go into all of the things that are the requirements for this guarantee scheme. So you need to live in the property for the entire time that the guarantee is attached. It's not like a 6 or a 12-month time frame. But the other thing is you can't leave.
Probably will be 6 or 12 months given the market movement.
Give it a bit of a flipperoo.
I actually had a conversation this morning like that, but I'll answer that question first. But you can't leave big lots of funds out, and it changes. So it's really important to note that this scheme is lender-based. So each of our lenders might have the scheme, might not, and they might have different rules around it. So different banks have different rules, but generally they can only leave 3 months living expenses or $20,000 or $30,000 out of cash. So you can't leave $100,000 in your offset account and use this scheme.
So you can't game it to that extent.
Yeah, and also if serviceability was the issue, which in that client's case it is, they wouldn't afford or could service a bigger loan anyway.
Are they going to stay in the property for the entirety until the LVR's back at 80%, Rach? Honest people around the country like that?
They will have to. So we've actually done some of these, for people that did qualify, we've done a lot of these guarantee schemes over the last years. So I'll give you an example of a client that used this and actually didn't want to live in the property. So they were in Sydney, a couple were in Sydney, a couple of years ago went to Queensland to buy a property to live in. They actually moved and they moved their jobs and everything like that. The price of the property has now increased. They refinanced to an 80% LVR. So they went in the market at 95. The property price went up. They released it at 80, and now they've moved back to Sydney, and that property is an investment property. But they couldn't have moved back until they released the government from the guarantee and the price of the property had gone up in value.
Okay. And who was enforcing them to stay in that house? Playing devil's advocate?
It's just you wouldn't they will be checking this, and it's very easy for things to be checked. Now, I would never think that you could get away with not living in that property.
Yeah. Interesting.
One of the things, and we might move to now some issues that that we have talked about around this supply and demand thing. Okay, here's a talking point for us to chew on. Last week we had the productivity summit where there was a round table of important people in Canberra consulting with the government on things. And I read an article, it was an opinion piece in the ABC or on the ABC website today by Alan Kohler, so I'm giving him the credit for these numbers. One thing that hadn't been really talked about, and people, it's almost like this third rail to mention it, and that's the net overseas migration. And have a listen to these numbers and figures, and you let me know if there's a reason why prices are going through the roof and why rent is going through the roof. In the year 2022, ending in June, Treasury forecast 41,000 people net migration. The actual number was 203,000. The year ending June 2023, Treasury forecast 235,000. The actual amount was 535,000. The year ending June 2024, Treasury forecast 235,000 people net migration. The actual amount was 445,000 people. And the year ending June that's just passed, 2025, The forecast was 260,000. They then changed it halfway through the year to 340,000. And the official numbers aren't out yet, but it's estimated that it could be around 380 to 400 people. So over the last 4 years, the government treasury forecast 850,000 net migration numbers to Australia, right? The actual number was 1.5 million extra people. 700,000 extra people above what the government thought would come to Australia. And that, my friends, potentially is why it costs so much to rent anywhere and there are no houses to buy. And I'm not against migration. We need it, but this is so savage. And you talk about this crap and you get labelled some alt-right extremist, racist asshole. No, I'm just looking at the numbers. It's just so wild, right?
Yeah. Yeah, and to go an extra step on that, a lot of those people are going to Melbourne, and a lot of Victorians are moving north to southeast Queensland. So you've got this double whammy of Melbourne's getting busier. It's now the largest city in the country, and prices are affordable. But the Melburnians have been there for generations, are saying it's too cold here. I'm moving north to southeast Queensland, and southeast Queensland have got this lack of land availability, lack of buildings, lack of everything, as does majority of the country in good areas. So where do they go from there? Well, there's this squeeze everywhere you look. Sydney's unaffordable. Regional coastal centres are in demand, and now they're starting to become unaffordable. So it's alarming times. There's no doubt about that.
And it's an interesting thing because, I was texting John, and a few people know I'm looking for a house because I want to buy a house to live in at some point, and I want to buy an older shack in around Newcastle. And I can tell you now, I'm looking for those that are in this area. I'm looking Garden Suburb. I'm looking Cardiff Heights-ish, like that kind of Rankin Park, that kind of strip west of the bypass. There is nothing under 900 at all.
Yeah. And when you think about the repayments on those, like at what are we now, Rach? Early fives for P&I owner-occupier. So that's 50 grand, like it's $1,000 a week. But I was talking to a guy over the weekend here locally, and they're renting a 2-bedroom in what I'd consider a lower socio suburb on the Central Coast, and they're paying $420 a week just for this rundown 2-bedroom unit in a lower part of the coast. So even rents are $700, $800 a week normal not normal, real abnormal, but in good areas they've got to pay what's equivalent to an $800,000 mortgage anyway.
So I think one good thing about the productivity summit, they've agreed to pause some building code. I don't know heaps of the detail, but just some of the red tape. There's still obviously safety and all that, but this is a big problem, and they need to use this state-based. What did they have during COVID, where they had all the premiers together, and because it's just as much as a state issue and a local government issue that it is federal, and the numbers just don't lie. If there's an extra 1.5 million people over 4 years, and there's been bugger all new dwellings being developed, I don't know. It's so crazy. So it is a national emergency.
It is. And I think that we can't control those things, and I think it's really hard. It's hard, and it can be really overwhelming for a first home buyer to look at all these stats and think, well, these are all things I can't control. But things that you can control are taking control of what's in your area of what can you do. So now you know that you can get into the market with this amount of money earlier. You know that there's going to be a shortage of houses. What's your plan going to be? Do you have something in place to be able to do what you can control?
And John, for the investors out there, what are you seeing and what are you saying to them?
I'm seeing a lot of investors paying too much for property right now. Because
so everyone needs a cold shower?
This scarcity of available properties coupled with what was going to be January but is now October for first home buyers, like I just need to get into the market. Like again, locally, talking to a real estate agent, there was an investor using a buyer's agent, mind you, which is even scarier, paid $50,000 over what the previous offer was to secure this particular property on the weekend, and it's crazy times out there. So just because you think you've got a buyer's agent in your corner working for you doesn't mean that you're not paying overs for a crappy property that when the tide goes out, there's some real concern. And so that is the risk of a buoyant market like this. And you know what, the old saying, when others show courage, you show fear. When others showing fear, you show courage, sort of thing. So and again, I don't want to put a negative spin on that, but it's a really interesting time for investors to say, well, okay, just cool your jets and just make sure that what you're doing is going to serve you well for the next 10 years, not the next 10 minutes in this heated environment. But I do feel for the tenants, because if owner-occs are taking more of the lion's share of properties, that also means less properties to rent as well, which obviously increases the rents in the local area.
Yeah, it's a real cluster F. And, you hear this whole dance with, we need to encourage older people to downsize. They've still got to live somewhere. It's not as if you downsize and there's a house or a dwelling that just pops out of nowhere. And so that's one issue. And then on the other hand, the government wants to encourage people to live in their own home longer with aged care starting with home services. So what are we doing here? If you're an older person and you can live in your own home, freaking stay there, I say, because you're not freeing up a home or a dwelling by downsizing. And the house that you're probably downsizing from, probably too expensive for a first homeowner to buy anyway.
Yeah. The other change that came out that isn't connected to this first home guarantee scheme is over in WA, there was the Key Start program, which lets people get in with as low as a 2% deposit. That got increased to 800,000. So that's going to mean people in WA are going to have a lot more fun getting in, because they weren't able to use that Key Start because the price was too low. So that went up this month as well. So that's going to have a flow-on effect in WA as well.
It's helped the already buoyant Perth market. Rach, the other winner from this, we haven't mentioned it, is the parents out there that don't have to issue the parental guarantee.
Yeah, well, that is a lot of people were going to use parental guarantees to try and get in before January. So there's going to be a lot of conversations had about, well, now we'll probably wait until October and use the government to guarantee rather than our parents.
I'm sure a lot of parents are happy about that, but obviously that can be used for other properties. Doesn't have to be a first home, does it?
Yeah, so I think the people that are still going to need to use the parental guarantees, if it's available to them, are people that are buying for investment or people that don't qualify for this scheme. So there is still going to be a lot of parental guarantees used.
Yeah.
So why wouldn't you qualify for the scheme? Because you want to buy a property that is out of the size cap?
Well, I think because of these, I think a lot of people want to keep living where they work. A lot of people don't want to buy something to live in. You've got the choice. If you live in a city, you can either go and buy in a regional centre that you can afford to live in, or you're going to buy that as an investment and stay renting where you are. So if you're wanting to do that and not wanting to move to the property, I think they're the people that would need to use the parental guarantee rather than the government guarantee, if that's there for them.
Yes, but the first home government guarantee scheme, if you do want to be just a quote-unquote homeowner, live in it, the only circumstance that you wouldn't qualify would be the purchase price of the property higher than the cap.
That's right. So, you might be buying in that you don't qualify. If you're buying for over, I'm just going to go down and have a look at, South Australia, for example, the cap is moving from 600 to 900. Well, if you're buying for 950, then you can't use that guarantee. But I think for most, if I have a look at, New South Wales going to 1.5 million, that's going to have most people in New South Wales are going to be protected under that guarantee now.
There's a comment here that I saw in the AFR's feed today, and it was titled, "No Bank of Mum and Dad, Lambie's Worry for First Home Buyers." Senator Jackie Lambie says she's worried about first home buyers using the government's accelerated 5% deposit scheme could find themselves in a precarious financial circumstance. Most of them will be young investors, one would think, trying to get into the housing market, which is really tough at this point in time, she told Sky News on Monday. A lot of these kids, unfortunately, don't have the bank of mum and dad to fall back on. You're walking a real fine line here, telling them to go and buy their first house, get into the market and do all this. And quite frankly, I'm being Jackie, and quite frankly, the bloody soldiers deserve better. If those interest rates turn around and go up, then they're going to have a real problem. Lambie said Albanese should be pushing for an immediate end to negative gearing for housing investors' third property. She argued that the move would bring $2 billion each year and could be grandfathered for new investors. I don't understand why he's not discussing this apart from his lack of courage. So, look, just there's going to be a heap of commentary out there. But I think one of the biggest things is if you're using this scheme, you have to live in it for at least 12 months. No, you got to live in it.
Until it gets to
until you
80%
refi out or add more money and be released from the scheme. You could probably renovate it because it's not like the joint equity scheme.
No. That's right.
Yeah.
And there are a lot of people that we've been talking to that is their plan. It is get in, add some value, refinance, get out.
And in finishing, Rach, so you said not all lenders are part of this scheme. Is there chatter of the other banks and lenders will join the scheme now that there's unlimited spots and it could be a good way for banks to make more money by having more customers?
Well, some banks want this sort of business and some don't. So the ones who aren't doing the guarantee, they just don't want that kind of business. And I don't know, I haven't heard anything else. But the ones who do it, some do it better than others. So I would I guess encourage anybody to reach out to a mortgage broker and talk about this. Just reach out to a mortgage broker and understand A, if you qualify, and B, if you don't yet, if you don't have enough deposit, if you don't have this yet, get them to help you on a plan to be in a position to be able to do it, because there's no point in not understanding it all. And a mortgage broker, it has to be a mortgage broker because they have access to all the different banks. Just get them to, will I qualify? What do I need to do to qualify?
Might have a busy couple of weeks ahead of you,
Well,
Rach.
I was just going to say, Johnny, I think Rachel's being too kind. I'll blatantly say if you do not have a mortgage broker and you want to see, because I honestly think you can get into a home sooner than what you thought, reach out to Sphere Home Loans today. Google Sphere Home Loans on the website. Rach, I told her she's going to have a hard time doing this, but you can actually book a 15-minute strategy call with Rach personally. She'll regret that in about 10 minutes. But on the contact us form, you can tick the box below, have a 15-minute chat with Rach, and she'll point you in the right direction. One of her team members will be able to help. John, final comments?
Yeah, interesting times, isn't it? Just fueling the fire. So, really excited first home buyers sitting out there at the minute, I would imagine, that can get into the markets. And, my only warning is don't go and buy for the sake of buying. Still keep your strategy about you and because a lemon will always be a lemon.
That's a good point. Your strategy is your strategy. If you woke up this morning having the strategy that we're buying the new house next year, my partner's 5 months pregnant or whatever, you can keep your strategy because the best time to buy a house to live in is when you're ready and when you have the money. And you will have to kiss a lot of frogs along the way, but keep saving, you will get there, and we are here to encourage you. Rach, final comments.
Just one more thing. I know a lot of people under this scheme aren't going to be able to buy the house or the home that they wanted, but they might be able to buy a house or home. And it might be a stepping stone. I just want people to think about, and especially in moments like this where the market is going to move and all of these things are going to happen. I'd really implore people to think about what's the best asset that I could afford to buy right now, and is that what I want long term? Maybe not, but can I buy that now and then upsize in a few years' time? I just think about the long term goals, and maybe you will need to buy something a bit smaller or what you can afford now. But it is a great time to consider that.
Yeah, love it. Well, we'll keep the conversation going in the Facebook group. If you want to reach out to Sphere Home Loans, you can do that. There's a link in the description and the show notes below. If you do want to, because we get a lot of emails, people wanting to buy property and they don't know their strategy, reach out to John Pidgeon. Just Google John Pidgeon, Solvair Wealth, Clarity Call, and book in and have a chat with John. And my last comment is, if you are watching on YouTube, Rachel's background, it's real. It's not a fake one. Wink.
That is, I had a fake background on. You made me change it.
Yeah, it said bloody Riverside. She changed it. I'm like, oh, that's a nice one. I'm like, crap, it's actually her house. But there you go. We only have successful people on this podcast. You can join. Are you embarrassed yet, or do you want me to keep going? Don't answer that. You can hear John and Rach over on the This Is Property podcast. Thank you so much, friends, for jumping on right now.
Thanks, Glenn.
Thank you.
Bye.
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 Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.